Hello, welcome back. I'm with John Feneck again, the portfolio manager and consultant. John, good to see you.
You too, Peter.
Talk me through your first half a day in Zurich. What's the pulse down there?
Great chocolate. Great vibe.
Yeah.
People are excited to be here. It's always a nice, start to what usually is a 2-week run for people like myself into the London conference next week. I think there is a definite understanding that things are not as rosy as we would all hope at this point, of course.
Yep.
I think personally it feels probably like the second worst time I've felt in the junior space since year 2000.
Yeah.
And I've heard that from a couple CEOs this morning. But the idea is to hold your head high here and say, look, we're not that far from a bottom, right? You may get another flush between now and 2024, but at that point, I think things look pretty darn good at this point.
Yeah, okay.
Yeah.
Obviously, we do have tax loss season coming up at the
Absolutely.
moment. Usually throughout December we see some negativity around stocks whilst people are trying to sell out. So you're saying that January, once we get past that point, you're hoping it may be a bit better than the industry?
Yeah, I think it'll be a lot better in January through April. You've got some seasonal strength in gold and silver, generally speaking, going back to say the 2000 recession. If you look at charts, and things have been so bad since August of 2020. Let's call it in our sector. By then, it'll be a 3.5-year downturn potentially, right? And so, at some point, you're going to get some capital coming into the sector for a safe haven bid, and part of it is going to just be new money, like on the value side, that's moving away from momentum and growth, I think, and looking for cheap investments that are going to do well.
I wouldn't mind exploring this idea of previous down cycles that you were just talking about earlier there. So
Sure.
how comparable is this to what you've seen in the past, and what have been the triggers in the past to get us out of it?
Sure, yeah, that's a great question. So obviously we saw a huge run in gold up to 2011, 2012 highs. That was, some would argue, a move from 1999, if you will, up until that peak. So I do not see a 12, 13-year run here. I am not in that camp at all because of algorithmic buying and selling. Things happen like this now. It's not, oh yeah, we're going to have a decade run. I would love that. I'm positioned for that. But let's be honest. I mean, things keep getting shorter. Let's look at the sell-offs we've seen, right? If you look at that long recession in the U.S. from 2000 to 2003, that was a long one. 2008 to 2009 was only about 9 months. Then you had, 2000, let's call it 20, the pandemic. That was super short, and things just keep getting shorter. So you have to be more cognizant of that as an investor and think that, my long run that I'm hoping for is probably not going to happen. But also, you need to be positioned now because when it happens, it's going to happen faster than you think.
Okay.
And just to articulate that a little further, when we saw gold on October 13th up 3.2% in one day, some of the juniors we owned were up 12 to 20% in one day. So you've got massive leverage to the underlying move in a metal like that.
So how are you positioning your own portfolio at the moment? What are you advising other people to do? Are you waiting for tax loss season to go? Because I usually see December as quite a good opportunity to actually get into the market and pick stuff up while it's cheap. But do you see a similar?
Absolutely.
Yeah.
We spent a lot of time between now and the 27th of December or whatever that last day is this year at our computers, because you can pick up things really cheaply. I mean, think about it. If you're a larger institution that got invested in a junior, and let's say your financials don't look great, you're going to be selling into this market, and you're not going to be necessarily doing it in an orderly fashion, meaning you're not communicating with companies. You may remember Cartier was one that we talked about on our last time together, and they had a large seller recently of 600,000-700,000 shares, but at least they coordinated with the company to say, hey, we've got this to unload, and it wasn't detrimental to the share price. But many times that does not happen, and so you want to be out there with bids to capture that kind of a market seller that just wants to get done with it. And there's a lot of opportunity for that, right? Because that's not really the price. When you get 20% lower than it should be, you're going to get a snapback rally in Q1 usually.
Okay. And what type of opportunities? Because it seems to me at the moment that the junior market is, I've been saying this for a few weeks, if not already at rock bottom, we're almost there. There are, especially with economic studies, I'm seeing in terms of MPV ratios to market cap, 95% difference, even up to 99% in some companies. You do wonder how it could get any lower. At the same time, though, there's not a buzz of optimism at the event of we're at the bottom and things are going to get better. So I guess even to add on to that, there is a bit of a worry that if you're a company in this cycle at the moment that isn't cashed up already, and this realistically doesn't have an asset good enough to make it out of this cycle, there's going to be a lot of administration and there's going to be a lot of people to lose money in this cycle.
Absolutely.
How do you avoid that, and how do you position yourself to really kick off into this next cycle whenever it does happen? Because it could be a while.
There's a lot of information there.
Yeah.
I would say that you're absolutely right. There's too many junior companies out there right now. There needs to be consolidation. We saw that with Marathon and Caliber today. But we need to see it done intelligently and at good prices, right?
Yeah.
And I would say that a couple of things there. One example would be Mexico, right? Mexico has been a great jurisdiction historically, but not necessarily for the last 2 years, let's call it, right?
Yeah.
And so now you've got 90 silver juniors in Mexico, just silver.
Yeah.
You know, it's like there's a lot of names in one little part of the world. There's got to be consolidation. There's got to be companies going bankrupt. You have to, I think one of the things we do well, Peter, is avoid some of the problems. Like last year, we had one holding that went bankrupt at 0.3% of our entire portfolio, and that was Great Panther. I was told bad information on 3 different Zooms. You know, you can't guard against people giving you the wrong information sometimes, but you can just bounce back from that and say, well, hey, I still like that project. So I talked to the Guanajuato Silver guys who bought, Utopia, and I said, let's talk a little bit more about how you plan to refurbish this. And, we've become pretty good, friends and shareholders of Guanajuato here at rock bottom prices if silver gets past 25, right? They need $25 silver to produce as a producer.
Yep.
But as a small silver producer run by, James and his smart management team, I mean, their lead geo was the lead geo at First Majestic for all of the good years under Keith, right? So it's like, you've got the leadership, you've got the people in the field. They're not spending money at conferences like this, like just willy-nilly. They're actually saying, hey, let's put it into the ground. Let's get this refurbished, but it's going to take some time. They need a little luck too, right? You need silver prices to escalate, and then you're going to do quite well. But that is an if, right? So
yeah, I think when you look at a company like that, it's obviously they need to increase their scalability from memory in terms of obviously a couple of years ago they built this from the ground up very, very quickly, and they've acquired a lot of assets that, like you said, need a higher silver price. Would you recommend to companies to look at, if the projects don't work unless it's a higher price than it is currently, would you recommend to investors that that's a company to go for?
Well, let's just say there's tremendous leverage in a company, like a share price like that. You can look at the 1-year chart. You don't have to look further than that. I mean, the stock doubled when you saw that move after the financial crisis. Go look at silver and how it did in March and April of this year, and then look at that stock. It went up 100%.
Yeah.
So silver didn't go up nearly anything close to that, right? It's got tremendous leverage to a move in silver. So that's why we like it.
Okay.
It's well run. It's got a great field team. It's going to make money at 25 plus silver, but anyone's guess here at 22, right? Like you need some luck.
Yeah.
But that's part of investing, right? It's taking calculated risk. It's not gambling. It's taking calculated risk and saying, I'm comfortable with this, I'm comfortable with that. If my thesis doesn't play out because of a silver price or a gold price, you have to own up to that as an investor and take a loss. I mean, it's just part of the game. But to answer your question earlier, I think next year looks like all-time highs for gold, in our opinion. Silver has pretty good resistance in that 25 to 26 level, so we see that being broken to the upside. And then a lot of these companies are going to start doing quite well.
And what's your rationale behind gold having a breakout year? What sort of data points are you tracking at the moment? What's the thought that's gone behind it? Obviously, geopolitically, it's a turmoil, so I do understand why most analysts, including yourself, would believe that. But it's quite important for the audience to sort of get their head around it as well.
Well, for your audience who hasn't seen much of our work yet, I mean, we've been talking about a gold price that does not hit an all-time high for the last 4 years. So I have not been in the 2,500 plus camp ever.
Yeah.
I've never talked about that, but I am talking all-time highs as of August of this year, when I started to see things really get stretched, and we didn't make an all-time high in the S&P and related indices, right? That's very important. If we saw an all-time high in things like the Russell and the NASDAQ aggressive indexes, I would be like, well, we need to rethink our thesis for what we're doing and go heavier cash right now in the mining portfolio, right?
Yeah.
We didn't get there. And in fact, we actually broke the 200-day moving average on the S&P to the downside for a nanosecond. I think it was about 3 days pre-Fed, and then the Fed came in and market participants said, oh, that's great, that's exactly what we wanted. I didn't get that same vibe out of that, and now you're seeing Moody's downgrade the US. So it's like this constant, it must be very frustrating for the average investor out there, because if you're not aligning yourself with someone like myself or another professional to help guide you through this time, it's maddening. It's very difficult. And so if it's not me, I would just suggest your audience talk to a professional to help them through this time. Help them understand what they own, right? A lot of portfolios that I look at when clients come to me are positioned for a move in 3 years ago.
Yeah.
It's like you have to cut bait with some of these names and say, like, that's not going to work now because of X, Y, and Z, and let's position for the future, because that's all that really matters at this point, right?
Yeah. One of the points on gold I wanted to talk about was, obviously we did see a downward trend just before the conflict in Israel and Gaza sort of kicked off. I think we were sort of heading down towards low 1900s, even into the 1800 mark.
Yep.
And then obviously we saw the conflict kick off, and we saw gold rally quite quickly after that. Does a lot of the gold price next year really have a weighting on really the geopolitical aspects of war and tensions around the world, more than the underlying indices and interest rates and other, I guess, macroeconomic trends that really most people usually use to base onto a gold price?
That's a fair statement. I think the world we live in right now is very uncertain, not only geopolitically, but just look at what House Speaker Mike Johnson just said the other day. We're going to fix this. Like, how do you fix $33.6 trillion? It's getting worse. It's not getting better. You're not going to fix it. We're living in la la land. When you hear things like that, you have to just say to yourself, okay, well, give me a few reasons how we're going to do that. What are the steps to achieve that? Yeah. And there's no steps. It's like we put ourselves in this hole, and that's why we're calling for a recession next year, Peter, because we just don't see this kind of rosy outlook. If you listen to the Fed November 1st, I was really surprised to hear Powell say that we're not going to have anything but a soft landing in so many words. Like, that's going out on a limb, and that's how you have the market rally, right? Because they love that kind of verbiage, but it's not accurate, in my opinion. Yeah. And personally, I think Powell's been a little bit off his game in the last couple of interviews that we've heard with him in September and November, right? It just doesn't look like the same Powell that's been stoic at the onset, and now it's sort of like he looks a little bit uncertain, and the markets don't like uncertainty. So we're, as we told you last time, thinking all-time highs for gold next year. Silver has been just so problematic, but we remain long silver. It's a top 10 holding for us, but again, we haven't added to that position since April of 2020. So we hold things longer term, kind of as core holdings, and we build spokes around that. And some of those spokes are junior mining names. So I could give your audience a few of those if you'd like.
Yeah, I wouldn't mind just touching on silver very quickly to begin with as well, because I think one of the things I'm trying to get my head around now, obviously we always, I guess, used to consider silver and gold very much linked together, especially throughout the 1900s. Obviously now silver's 50% industrial metal, and you don't really see that close relation to silver and gold as I guess we're used to. I guess from your point of view, how much is the silver price tied to the same geopolitical and economic events that gold is versus normal supply and demand fundamentals?
It's hard to put an exact finger on that, but I would just say that we're sitting here and the gold-silver ratio right now is 87.02.
Yeah.
I checked before we went on. I don't have all this memorized. But 87 closing in on 90, which is your historic kind of, I got to buy some silver number.
Yeah.
I mean, going back to 1980, I don't think you've ever been wrong. I mean, to buy silver, And buying silver equities is what we're more interested in around that, right? Because when silver moves, silver equities move much more. So, yeah, I mean, I do agree that it's being seen as more of an industrial metal in 2022 and 2023, which is a little bit concerning because we don't see it as, we don't want to see it as much of an industrial metal as a precious metal, of course, as it has traded historically. So.
Okay. Yeah, because obviously there's about a 20-to-1 ratio of silver to gold in the ground,
Right.
in the Earth's crust, but obviously we're seeing completely difference in price in there, which is phenomenal. Yeah, I wouldn't mind. Maybe we can just finish on what are the type of companies that you're actually looking at right now,
Sure.
and you're getting excited about.
So I saw a few here today already. I mean, Goliath Resources, Crescat Capital has a 17% position there. So anytime that group has that big of a position, I want to do my own due diligence and kick the tires. Roger has a really interesting approach to the business. I mean, he flat out said, hey, we want to sell this at a premium to a major, right? Like, that's what I want to hear. I don't necessarily want to hear, I'm going to build this and going to, get down that road 5 years from now. It's like a long haul for investors, right? So they've got, 3 million ounces kind of identified over here. They've got 7 million ounces identified over there. They've got growth potential beneath that in their gold digger property, and they have 100 different holes on the nose, 100 different holes where they haven't had assays released yet. So if you look at their website, one thing that impresses me is that they have news every 2 weeks. It's like really positive for investors to get their hand held by a company like that through a period like this. If you go silent for 2-3 months, people are wondering like what's happening, right?
Absolutely.
Because if you're an Explorco, hey, we're paying you to come out with some good drill holes, and like that's part of the game, right? And they have their numbers October 30th were outstanding. They followed that up with one release here in November. I expect more good results from Goliath Resources. Another one, and by the way, the share count we look at very closely on a lot of names. That's 143 million diluted, but it's about 101 without the dilution of warrants and options. Okay. And those warrants and options, I did clarify, are not held by a lot of nefarious parties. So, again, not a huge overhang there, which is positive. Also in the gold space, another discovery last week from Platinex at the Heenan complex. Platinex is a much smaller company, so there's more risk there. But Greg has an interesting company in that it's gold, it's silver, it's PGMs, and it's a royalty portfolio, and now they're involved in uranium. So it's kind of like, I wouldn't want to say project generator, but they've got a lot of different ways to attract investors. They're planning a spin-off of their uranium assets, I believe. That's positive in a hot uranium market. So, I mean, that's one that's really caught our attention here in terms of breakout volume over the last couple of weeks in the U.S. And pivoting to silver, we like a couple. One we met with here, Aftermath Silver. Aftermath is in Chile and Peru, and they've got, I think, about 141 million ounces of silver identified, but they basically have a lot of what's called manganese as well, which is on the critical minerals list. Manganese flies under the radar, but a lot of, mining experts like Jeff Christian, really think highly of manganese. And the real catch, Peter, is going to be when they come out with their metallurgical results, if that's going to be, like agricultural type manganese, or is it going to be like battery grade, right? You want to have that battery grade element, which is still unknown at this point, but at 12.5 cents US, it's worth a flyer because they have so much silver, right? So who cares if the manganese doesn't work out, in my opinion?
Yeah, I think with manganese as well, obviously they need the high purity manganese sulfate monohydrate, but on top of that, there's the amount that's being refined from China has actually increased more than people thought. The bottleneck isn't there. So a couple of years ago, I think manganese was this very exciting, explosive story in the industry that was under the radar, and it'll be interesting to see how that develops. But you're right, I think having that as a side product for down the line probably isn't a bad thing whatsoever if they can get to that battery grade.
Right.
But when you got enough silver there, like they do, I mean that sounds like worth an investigation.
Yeah.
John, thank you very much for your time.
Pleasure. Thanks, Peter.
Thank you.